I'm joined by my guest who will help us put all of these numbers into perspective. I am joined by Dr. Aliyu Ilyas. Thank you, Doctor, for joining us on the program this morning. Doctor, can you hear me?
Hear you. Good morning to you.
Okay, good morning to you, Dr. Aliyu Ilyas. You have heard or seen the responses that we have gotten so far on social media. Very intense and some were very, angry responses talking about the current economic climate and current, policies affecting, the Nigerian economy as a whole. But let us begin with the report that has been released by the National Bureau of Statistics talking about the capital importation report, where we did see a decline of about 22.85% in the second quarter of 2024. What are your thoughts regarding these numbers, and did you see that coming?
Right. I think it's quite is expected because if you look at Nigeria economy and the challenges we have over time, you know that it is expected that countries wouldn't like to bring their or investors rather wouldn't like to bring their investment into a country like Nigeria because of a lot of challenges that is actually ongoing. And among the challenges are the uncertainty in the Nigeria economy. I want to say uncertainty. It has a lot of thing under it, but the major thing is that we have a turbulent economy that people will not want to come and invest because they are not sure of what happens next.
I mean, I'm just going to, re-echo what most of the social media commenters did say. And most of them, said or talked regarding the inconsistent government policies. But let us hear from you. What would you say was the major contributor to this decline?
Right. I think the first contributor is our MPR, our interest rate, because once you are coming into business, you look at how you can also come in and make sure you work on your capital very well because you bring capital, you need to get more to do the business. Then the second one could be also the forex and the forex challenges. You agree with me that our forex is the most challenging one at this point in time, where you have $1 to equal 1,600 naira. No business will want to come to such places. The another thing is we must look at very well is import duty. If you look at our import duty, there have been inconsistencies in that area too. And if you want to come with, especially foreign direct investment, that has to do with structure. You have to look at it critically. That if I bring this, how much am I paying in duty? Is very very key. So if you look at the combination of MPR, forex itself, and the import duty, it's a no-no for most businesses.
Okay, just before we go on a short break, I will want to hear your thoughts on this. One of the commenters also did mention, the responsibility of the Nigeria Customs Service, as though the NCS is prioritizing its revenue generation functions over facilitating trade. Do you agree with that school of thought?
Right. My own challenge is that we always look at monetary policy, fiscal policy, and we never consider trade policy. So trade policy is a big factor because it will help balance of trade and balance of payment. But in this case now, we have inconsistency from the customs, and it's affecting. They are turning customs service to fully import money generating avenue rather than using it to actually manage the economy itself. And it's a big issue that we need to look into.
Well said, Dr. Aliyu Ilyas. But let us go now on a short break. When we return, the conversation continues on Nigeria's capital importation report as released by the National Bureau of Statistics. To stay. Welcome back from that short time out. You are still watching Business Daily, coming to you live on Trust TV. And we have started a conversation on the recently released capital importation report by the National Bureau of Statistics. And according to the NBS, in the second quarter of 2024, Nigeria's capital importation declined by about 22.8%. But I have my guest, who is an economic analyst, Dr. Aliyu Ilyas, here with us on the program. Thank you again, Doctor, for joining this morning.
Thank you for having me. Good morning.
Thank you. We want for us to look at the, sectoral performance. That is the different sectors and how these inflows came in. And according to the report, the banking sector again, continued to lead in capital importation. If we can have, this data displayed on the screen as to how the different sectors did perform, with the banking sector, leading in capital importation. I will want to hear from you, Doctor. What does this indicate, having the banking sector lead again regarding capital importation?
Right. I think it is expected because if you look at it, their banking dealings are much more of portfolio investments. It's just for a transaction related, such as forex movement, money movement. So, and that's why banking is taking the lead, and it's not good for the economy because if you look at all the equity and all the monetary instrument, they will pass through the bank. So, bank is likely to be the highest, but it's a wrong trajectory for Nigeria because if your capital inflow from foreign investment is coming through portfolio, not in terms of a structure related of FDI itself, it becomes a serious problem. So it is expected that banks will get more because everybody wants to work with liquidity. Everybody are thinking it's better to do business that does not have to do with passing through the Nigerian border. They want to do business that does not involve engaging in interest. They want to do business that does not involve bringing, structure to the economy. So, and that's why we have such one. So that's why banking sector is taking the lead. If you look at the other sectors, they are struggling to actually survive in Nigeria.
And we have the numbers displayed on our screens, with the banking sector contributing about $1.12 billion, about 43.15%. The production and manufacturing sector contributed $624.71 million. That is 22.99% of the entire capital importation. Meanwhile, the trading sector did contribute $569.22 million, and that is 21.86% of, the entire figure. But let us continue our conversation regarding the banking sector. Initially, that is before the break, you did mention the MPR, which you said is a major challenge. But then I would like for you to explain or juxtapose this, because you mentioned that the MPR is a major challenge. However, we still are seeing the banking sector attract capital. Can you, help us understand, this action? That is the MPR on one hand, and then the banking sector still attracting as much as it is attracting.
Right. I think before that, I'd like to clarify that even banking sector are not making enough as expected because if we have good capital inflow, banking sector should be hovering around $2 billion, not this $1.12 billion. However, in terms of why is banking actually leading now, when we have more interest rates, who benefits more? It's still the bank, because the money I borrowed last year at so percentage, it has increased to different, and I borrowed last year, I'm paying maybe 10-15%. Now it is about 25-35%. So it's to bank benefit. So if you look at it generally, it benefits banks the more when interest rate is high, because they actually they're not likely to give small people that will come 500,000, 200,000 naira interest. They'll be looking at look at it in billions, and it's a benefit to bank. I think that's the major issue. So banking sector, yes, they are doing well, but I think they should do more than this if we have a capital inflow compared to our our expected GDP and our size of the economy.
Okay, that is well explained. But let's look now at foreign direct investment, which contributed about $29.8 million, and that is accounting for 1.15% of total imports. Some would say that we could have had FDI accounts for more, comparing it with data that we have seen in previous quarters. But let's speak generally now. What would you say is the key or are the key challenges that have contributed to the decline in FDI, that is foreign direct investment?
Right. You will recall that President Bola Ahmed Tinubu have been traveling everywhere to make sure that he attracts foreign direct investment to Nigeria. But So sad that we are not attracting anyone. Rather, we are losing more. I can tell you a lot of companies are closing down their shops. I'm not talking about local companies, I'm talking about foreign companies. The example is GSK. You know, GSK is a pharmaceutical company that is doing business. So if GSK is leaving Nigeria, do you think other companies will want to come? And it's a factor that we need to consider. We must first and foremost consider the enabling environment. That is the uncertainty in our economic climate. A lot of uncertainty. You cannot assume what will happen next. And among what will happen next is the forex. You know, you cannot say by January 2025 that a dollar will be 1,200 or 1,000 naira because of the volatility in the market. And you recall that it is now willing buyer, willing seller. And with that in mind, it simply means we may find it difficult to have a stable economy. So until we have a pair, we control that and said, okay, within 6 months, this is what we are going to have. Within 1 year, we are going to the dollar naira is going to hover around 1,000 naira, and that's why people will have the confidence to come. Then in terms of the another one is MPR. I can tell you most manufacturing sector, which mostly happens to be foreign direct investments, are not even doing well, let alone having other to come. And you know, as a business person, you have to do what we call forecasting. When you are forecasting, you look at time series forecasting, you look at causal effects, you look at judgmental effects, and you now add everything together, which is called ensemble. So you have to look at all these things together. You have to forecast that in the next 5 years, what will happen in Nigeria? In the next 2 years, how much will dollar be? So if you look at the volatility, Nigeria will not be a destination for you because you will not be able to predict it. And that's why we have a reduction in manufacturing sector every day. Perhaps if you also look at the manufacturing sector, they also produce and nobody is buying, as in they have unsold. So if you are producing, you have to also focus on about the purchasing power of the citizen. So if you look at the purchasing power of the citizen, is also another discouraging element that will discourage people from coming to invest. And like I told you earlier, I also talk about import duty. You know, for FDI, you are going to bring in raw materials, you are going to bring in equipment. So you have to consider the cost of those things to Nigeria. And if you look at the volatility and the rate of arbitrary increments in custom duty, you will be discouraged. So these are among other things that are causing discouragement in terms of capital importation to Nigeria.
You have spoken extensively regarding, the key issues that are deterring, capital importation, especially FDI. But I will want for us to be more solution oriented now, look at measures that could be implemented to attract more foreign direct investment. Because like you rightly stated, we have seen President Bola Ahmed Tinubu travel around the world and try to market Nigeria verbally, to other nations. But unfortunately, we still have seen, the mass exodus of some multinationals from Nigeria. So let us talk about policy measures that are very important, low-hanging policy measures that should be implemented at this point. What would your recommendations be?
Well, let me use the common language, low-hanging fruits that we can actually tap immediately that will bring a positive solution. The first one is our forex. You know, our forex is a big issue because our forex is actually affecting energy security, and because we have $1 to 1,600, people are finding it difficult to actually purchase energy, gas, electricity, PMS. These are the problems until people find it, because you cannot manufacture in a country like Nigeria without looking for alternative energy. Even the band A, you know how much it actually costs. So these are the problems that we need to do. The other one is the issue of NPR. NPR is a big factor because if I want to invest in business, ideally every businessman will not use his own capital to invest. He also want to go to the bank to get more loans so that he can actually marry them together to do business. And if you want to do that, Nigeria with the NPR is discouraging economic growth. So we cannot go to bank and easily get a loan to do business. It becomes a serious issue. So if you look at forex problem and also NPR, there must be immediate solution. And the immediate solution is to make sure that Nigeria have control over our forex. It must be controlled by Nigeria. No country in the world will leave its forex market to willing buyer, willing seller without one way or the other controlling how much it will cost. No country in the world. So we must start from that and also reduce our NPR.
On the issue of MPR, the CBN has been, clear about the increase in MPR and has said that this is expected to tackle inflation and nip inflation in the bud. But from what you've also stated, it seems as though that increase is affecting economic growth. How then can we create that balance, tackling inflation and of course, encouraging growth, GDP growth?
I must tell you that the CBN approach is counterproductive, because if you want to reduce inflation and you want to also kill growth, you could see that it's the two things that need to be managed very, very well. So there should be a balance. Now, I will advise that the next MPC, they should leave the MPR as it is, while they should observe what will happen, because by the time let's even talk about the impact of NPR on economic growth. The first impact is that when the interest rate is high, people will not go to bank to borrow, and they will not invest in manufacturing sector. And we don't invest in manufacturing sector, it simply means it will become it will be an enabler for low employment. And when there is no employment, it will also reduce our GDP. So these are the factors that we need to consider. We need our GDP to boost. We need our manufacturing sector to be working. Perhaps the government should maybe create a particular window for manufacturing sector to have 1 digit interest loan, so that they can access that market. But you cannot say you open everything. It's not done anywhere where you open everything to willing buyer, willing seller, and you now leave the loan to be increasing arbitrarily like this. It's uncalled for.
Well explained, Doctor. But I will want for us now to look at the capital importation by place of origin. We did see the United Kingdom lead in the area of, country sources of capital. The UK did lead, recording about $1.120.15 million, and that is 43.01%. And closely following the United Kingdom is Netherlands, contributing $577.82 million, and that is about 22.19%. And we also do have the Republic of South Africa contributing $255.98 million. That is 9.83%. So beginning with, these largest contributors to capital importation in the second quarter, what do these patterns, because we have seen this become a pattern. Now, talking about the United Kingdom and Netherlands specifically, what do these patterns of capital origin suggest about Nigeria's international trade?
Right, I think it's quite surprising that we're not having America and China in this list, and so sad, because there are people that will trade with more. Our largest trade partner now is China. Then America follows suit, and it's quite imagine that we could not even see capital inflow that will compete, compared to United Kingdom, Netherlands, and Republic of South Africa. And I must also mention this. This is why we have much more of portfolio investment. Because if you look at Nigeria and South Africa, do we have any investment in South Africa as a country? I can tell you, South Africa have a lot of businesses in Nigeria. I don't want to be mentioning them. I'm sure you know them. A lot of them that, then you also have United Kingdom. And what comes of United Kingdom is portfolio investment. South Africa is portfolio, Netherlands is portfolio. We're looking at where we can actually have foreign direct investment like America or China. China come to invest in terms of physical structure. I can tell you we have CCE, ECC, a lot of them that have, that could be bringing, that would make them to bring money to Nigeria. We must do more to make sure that there's reciprocity in terms of our business partnership. We cannot continue to do business with you that you will not do business with us. But I know we export oil to China, so I was expecting China to be on the first or second list. And I was also expecting America. We understand that Russia and Ukraine is having issue in terms of the challenging war they are having. So I think this shows to us that we are not doing what we're supposed to do to attract more investment from these countries.
I think you made a very interesting and very valid point regarding the reciprocity. One would expect to see China, being that China is one of our major trade partners. But seeing that that is not the case, what would you say is the contributor to that? That is the non-reciprocity between our trade partners and our capital importation partners, I should call them.
It's just simply because we are not a destination for investment. We are not attracting investment. Go to a country like Rwanda. You saw manufacturing, car manufacturing company there. Go to South Africa. Come to Ghana. Close. In fact, Ghana is doing 6.9 GDP simply because there is foreign direct investment. I can mention some companies in Nigeria, especially companies that produce tire. Most of them have relocated to Ghana, and because of the energy security, and that is a problem. Until we can do something to make sure that we people will attract people to come and invest in Nigeria, we may be having this issue. Our president can travel all over the world. If your economy is not good enough, it's a big issue. And that's why when president said he's not going for hunger, I was thinking maybe he has discovered that he needs to fix his own first before he can actually go out to attract. So if you continue to go outside to attract and you're not fixing your own economy, it's a serious problem. So the low hanging fruit is that we must make sure that our energy security is well organized. We must make sure that we review the forex market. We must make sure we also review the import duty. These are the things that will attract other people to come and invest in Nigeria.
We want for us to touch on, the loan dependency structure of the Nigerian economy, because the report did state that other investments were predominantly driven by loans, which makes up about 98.6% of the foreign capital inflows. With the rising debt profile of Nigeria as a nation and the potential risk of this heavy reliance on foreign loans, how might these, affect Nigeria's debt profile in the short to long term?
Now, ordinarily, I was thinking President Bola Ahmed Tinubu would discourage anything loan to Nigeria. And because of what? Simply because this government is attracting more income than any government in Fourth Republic. You see, having removed fuel subsidy, government get more income. Having float naira, government get more income. The issue of taxation, especially import duty, government get more income. So I expect that government should discourage both states and other government entities from getting loans. And even loan at this time, it's much more dangerous because you have to service the loan. And for servicing the loan with these challenges of forex. So it's a bad omen for us to have more capital inflow in the names of loan. It's a shameful trajectory that we must make sure we change over time.
And just before we go, we want to hear your thoughts on how, geopolitical events that is across the world might influence, our future capital flows. You did mention the Russian-Ukraine war. You also did mention, some unrest in other parts of the world. And of course, the United States election, which we do expect, to come up shortly in the year. But let's hear from you. How do you foresee this event, playing out and impacting capital inflows into Nigeria?
Right. I think geopolitics or geoeconomy is becoming something that we need to be careful about. We must make sure that we fight for our own force. You recall that country like South Africa, China, they belong to a particular bloc, which helped them that no matter what, it's like a shock absorber to them. But we don't belong to anyone. Because we are just floating as in a global economic player. So we must make sure we consider our own first. Then you talked about American election that is coming up in November. I can tell you it depends on who actually won, because Donald Trump will have his way of maybe affecting the economy. And then Kamala Harris will just be a continuation of beating Biden process. So for me, we should be conscious of our own, and we should also always focus, because if we focus very well, we'll know the impact. Look at the impact of Russia. In fact, Nigeria is becoming a country that is looking at a global crisis so that they can take advantage of it in terms of oil, which is not attainable anymore. Before, by the crisis that we're having at Israel, Palestine, Lebanon, Iran, it would have positive one for us. But we should stop looking at that. We should have a good economy that will not depend on the globe, that will not be affected with the global crisis or global development.
Well said. I have been speaking with Dr. Aliyu Ilyas, who is an economic analyst, speaking extensively to numbers released by the National Bureau of Statistics on Nigeria's capital importation for the second quarter of 2024. Thank you, Doctor, for all the insights that you have shared with us this morning.
Thank you for having me.
And that is where we draw the curtains on today's edition of Business Daily. But keep the conversation going across all our social media platforms, on YouTube, on Instagram, on TikTok, Facebook, Twitter, and of course all our social media platforms, like I rightly stated. We will be there to interact with you on the back end. My name is Chiamaka Nendu. Thank you for watching, and bye for now.